Now, Dogecoin, it started as a joke in 2013, issued as a cryptocurrency based on an internet meme of a Shiba Inu dog, but nobody's laughing now. The token saw an astronomical surge in recent months, with its value skyrocketing over 10,000% since early January. Then Dogecoin prices crashed 30% after a remark by Tesla CEO Elon Musk. Now, despite this severe price fluctuation, more and more investors are placing their huge bets on Dogecoin, on cryptocurrencies, especially here in South Korea, where there is a so-called Kimchi premium. Now, this has renewed the debate over whether there's potential in cryptocurrencies to become safe financial assets. So the question is, are they a fad or are they the future of investment? To answer this question, we connect with Chu Gi-young, CEO of CryptoQuant, based in Seoul, and Erica Razur, Assistant Professor of Business and Finance at Maryville University. Now, please do note that our guests are not offering financial advice today, but they're simply providing their personal opinions. Well, thank you so much to both of you for joining us. And, well, to go straight into the questions, let's start with you, Mr. Ju, here in Seoul. Now, Dogecoin, it's been the word on everybody's lips. It's been affected tremendously, especially by celebrity figures like Elon Musk and Snoop Dogg, whose statements really hyped the currency and then even made it plummet in a matter of days. So what is your interpretation of this Dogecoin phenomenon? Do you think this hype is going to continue?
So basically, Gen Z and millennial investors who didn't go through a financial crisis, they're willing to take a risk due to a combination of asset price inflation from quantitative easing, and innovations in trading infrastructure have lowered the barriers to entry for retail investors. Additionally, retail portfolio theory, buy and hold for 30 years, is being replaced by new investing approaches, including bottoms-up communities like Wall Street bets. I believe that in the years to come, active strategies will have a place in every retail investor's portfolio. Globally, Gen Z and millennial investors find finance products through web search, not going to a bank counter. For now, they're just roaming around social platforms like Reddit, Twitter. Wall Street bets is one of the examples. So this is where this Dogecoin hype came from. We're living in the era of social finance. As long as celebrities, figures like Elon Musk tweet about Dogecoin, the price is likely to increase as there are so many Gen Z and millennial retail investors. But I would say cryptocurrencies like Dogecoin is just a meme. There's no intrinsic value. So please be careful when you're investing on coins like Dogecoin.
So a lot of excitement. It seems there's a change, as you said, in the way people are investing, especially among millennial investors. And Dr. Razur, I'm curious to know what you make of this whole Dogecoin craze. Do you think this rally is going to continue? Do you think it's healthy?
I think, we need to consider a few things here. In the short of it, I don't think it's healthy. When we think about the emotional behaviors of retail investors and the source of where they are getting their information. We can't place the responsibility for the fluctuations directly on Mr. Musk or Mr. Keepin's comments directly. They're clearly both visionary entrepreneurs, but they also have influencer status as public figures. And while they've both made controversial statements, they both acknowledge that crypto is new, and while it's got potential, the odds are really stacked against them. And so they must proceed with caution. This is from their own mouths. And so what isn't healthy in particular is the mindset of a lot of these young crypto investors who are looking to get rich quick. In fact, I see a lot of things like on TikTok and YouTube, Reddit, Wall Street bets, we're all going to the moon, right? And so many of these things have, really close elements of these pyramid type schemes or multi-level marketing that drive this hype. And we've got to be very cautious about that, and young people especially, when they're inundated with all these social messages about this and they don't understand what it means to buy and hold. When you look at, if you're on Coinbase, for example, the average trades, it's a couple days to 18 days. They're not holding things. They're not understanding some of these fundamental investment type of principles. And going from that as well, there are certain key factors here that we have to think about, and that is that intrinsic value. Doge is one of those examples to where what is the value? What is the underlying value of that digital asset? And just because the Dallas Mavericks and Elon Musk and SpaceX are accepting it as currency with their respective business organizations doesn't make them a viable investment in the future.
Right, and of course, Mr. Musk isn't going to compensate if you make, a tremendous amount of losses. So it seems that this may continue as long as he enjoys basking in the attention. But
and I do think that's part of it. I think there's a lot to be said about that.
Some irrationality there. And Dr. Azure, in Korea, we have what's been dubbed as the Kimchi premium. And what is it, first of all? You've written about this, and how significant is it?
Well, the Kimchi premium itself, is really, the prices for Bitcoin, for example, can be higher in South Korea than on other international exchanges. And so Kimchi premium really is that gap in cryptocurrency prices in South Korea exchanges, compared to foreign exchanges. And this gap really comes from, a lot of the capital controls and regulation limits that really kind of force investors away from, trading on the domestic exchanges. And, what we're starting to see from a regulation standpoint, especially recently in the last few days, the premium has declined significantly. I believe it's at 2% based on, some of these government crackdown things from South Korea's government. In addition to, what's going on with the Bitcoin prices. And so, the important thing about the Kimchi premium, especially when we're looking at kind of a broader scope of things, it's really looking at a matter of arbitrage opportunities. And as the Kimchi premium and the government regulations, kind of squeeze that down a little bit, arbitrage opportunities and illegal activities, opportunities for money laundering are going to start, sinking significantly.
Mr. G, from here in Seoul, what's your take on this Kimchi premium that we're seeing in the country?
So the retail investors market is growing at levels never before seen in the history of finance. Retail investors volume is already surpassing that of hedge funds and mutual funds in the States. Korea doesn't have institutional investors, so the Kimchi premium is a pure retail FOMO indicator. In the past, retail FOMO was a bearish signal as whale investors tend to profit from retail investors. But this time, it's different. Due to asset price inflation triggered by quantitative easing, more and more retail investors joined the market and revolutionized the financial markets like GameStop and Dogecoin, for example. So it's hard to say the price goes down when retail investors are joining the market. Actually, it's the opposite. Retail FOMO makes asset price goes higher, I think.
Mr. Ji, here in South Korea, financial authorities, they've been warning against cryptocurrencies. Finance Minister Hong Nam-ki, he said that cryptocurrency have no intrinsic value. But at the same time, especially abroad, we're seeing more and more institutional investors buy up Bitcoin and other major cryptocurrencies. What are your thoughts on the value and the future potential of major cryptocurrencies like Bitcoin and Ethereum? Do you think they're going to start perhaps declining once regulators start really clamping down on them?
It depends on what regulation is trying to regulate. If it's about taxation, that would facilitate more institutional investors join the market. If it's trying to ban Bitcoin, that's going to be a serious problem. But I would say developed countries like US and Korea can't ban Bitcoin as the bottoms-up adoption is happening. We're not living in North Korea, right? The government can't stop people investing in cryptocurrencies. So I think we are going towards good regulation. So Bitcoin and Ethereum, more and more institutions join this industry, and it's inevitable. Bitcoin price is going to go up. Yeah.
And Dr. Azure, other governments have been quite they've been cautioning members of the public as well. Andrew Bailey of the Bank of England, he said last weekend that, well, cryptocurrencies, he also said they don't have intrinsic value and that people investing in crypto should be prepared to lose all their money. So as long as cryptocurrencies remain highly speculative and prone to fluctuations, how should they be regulated?
In a lot of ways, I agree both. I agree and disagree with Mr. Bailey. Where I agree, smart investing, no matter what asset class, whether it's more traditional investments like our equities or our more digital assets that we're starting to see in this broader realm of crypto, they should be approached with a don't invest in it if you can't afford to lose it approach. Retail investors, to remain healthy and safe, they need to understand that their risk tolerance still applies across the board no matter what it is. And the onus really is on, the investor, the retail investor, to seek out education. But at the same time, we also understand that, regulations and things around this can help make, the argument for being a good human and protecting investors, we can strengthen that. But where I do disagree with Mr. Bailey on this is really this issue of intrinsic value. In fact, a survey, I believe it was conducted back in March by Goldman Sachs, it showed about 40% of the bank's London clients have crypto holdings. So that tells us that institutional investors in particular have noted the value. And I think that is a critical piece to this. When we have, major banks globally that are taking an institutional position in this, it does have some sort of fundamental or intrinsic value, and we need to pay attention to that.
And Mr. Ju, then do you see this trend continuing? Do you see the nature of stock investment continue to change in South Korea, especially among the millennials, the younger generation?
Yes, I'm the younger generation in Korea, and our moms have been told us that you should invest in buildings or real estates to get rich. And our younger generation, Gen Z and millennial investors, we realize that this is the opportunity to get rich and in decades. So we realize that's the key things that changing the nature of stock investment. And I think more and more retail investors in joining in this crypto industry and changing their strategies more actively. People prefer active trading to passive trading, like I said before. So there are so many Gen Z and millennial retail investors. We don't put our money to banks anymore. We invest in stocks and cryptos. So, yeah.
Right. So given the socioeconomic sort of status of young South Koreans as well, it's hard to invest in, it's hard to put our money in buildings and real estate and those traditional forms of assets. But, well, I suppose cryptocurrencies in that sense is sort of generating opportunities for fast wealth gain as well. And, well, Dr. Azure, what do you think about this? Do you think cryptocurrencies, do you think they're going to stabilize as safe assets and become even used in transactions? Or do you think they'll remain risky with an element of novelty?
Overall, I believe that cryptocurrencies are here to stay. Going back to, Musk and Cuban, those are two guys who like to have fun. Dogecoin is fun because it was based on a meme. It was novelty. It was born of pop culture phenomenon. And even more so, it's been reinforced by TikTok and YouTube and Reddit. But there's so much more to crypto and digital assets than just Bitcoin and Ethereum and Doge. We've got companies out there who are doing huge, amazing, big things with enterprise blockchain, cryptocurrency, custody, stablecoin, low carbon NFTs, and synthetics. And it's getting a lot of attention. And that's where I believe this fundamental value is. And I think this is where that legitimacy is finally coming from. And that's why I think crypto is here to stay. It is providing access and value at the same time to younger investors who can look at the long-term business applications of these digital asset companies who have something novel and new and interesting to bring. And I agree that this is an opportunity for people to make money, where it has been historically impossible to invest in real estate. You know, a lot of young people, we get the same advice, you know, here in the United States, for example, but we've been limited in our access. This is a way to kind of break those barriers. And it's here to stay. And I absolutely believe that with time, you know, the fundamental value will continue to take note on a much more widespread basis.
Right, a lot more excitement to come, a lot more creativity.
Absolutely.
And well, this is where we must then wrap up the interview today, I'm afraid. And again, our viewers, please do note that our guests are not offering financial advice, but providing their personal opinions. That was Chu Gi-young, CEO of Crypto Quant based in Seoul, and Erica Razier, Assistant Professor of Business and Finance at Maryville University. Thank you both so much for your time.
Thank you. Have a wonderful day.
Thanks for having me.
Thank you. And to our viewers, as always, thank you very much for watching.